For the Wall Street Exclusive, I'm Joe Springer, helping you make informed decisions so you can succeed in the market. Okay, let's do the thunder angle. We did the thunder angle yesterday where we do rapid fire stocks and a lot of them and then quickly tell you our opinion. Nobody liked it, and so we're gonna do a little bit different today. Jim Cramer has the lightning round. We have the thunder angle, haha, get it? Okay, so we're gonna piggyback off of Jim Cramer last night. Here are 3 questions from the lightning round, one that we agree with, one that we disagree with, one that we agree with, and one that he needs to do more work on. Hey Jim, we'll do the work for you. Okay, number 1, American Mobile SAB. Cramer says it's too hard to know what will happen in Mexico. This is a Mexican telecom. He likes Verizon better. A lot of people that are listening might say, and probably AT&T too. Okay, and I say, no! Those are, Verizon and AT&T are actually, they're pretty, as far as big, steady businesses go, they might be the scariest ones. Google has a mobile virtual network operations operating system, a new business, a mobile network virtual operating business. It's going to be a telecom, only it's going to use Wi-Fi. So if people are, always in a city, always around Wi-Fi, they can get a subscription service from Google, and then if they leave Wi-Fi, Google is said to be going to be piggybacking off of either Sprint or T-Mobile, who have service reseller deals with Google. So that Wi-Fi, and then they're not alone, Dish Network may do something similar. So instead of having all these towers, you may be able to just go over Wi-Fi to get the best customers, the people that are the richest, always in the cities, stuff like that. And if it gets worse than that, it's likely that these voice communications will be loss leaders for Google and Dish, meaning that subscription to their service is not how they plan to make their money, but through selling ads or selling extra content is how they want to make their money. That's terrible for the competition, Verizon and AT&T. In addition, all telecoms have stinky customer service. I would know, I used to work at AT&T, singular AT&T, and so just by simply not being awful, Google could take market share. And so AT&T and Verizon are under attack by Google and Dish. And so Sprint, a little better than Verizon, T-Mobile, a little better than Verizon. If you're adventurous, America Mobile SAB, Mexico might be the better place for telecoms for a while. You imagine in America, more Wi-Fi, more ways to steal from the competition, more ways to compete with AT&T and Verizon. Whereas in Mexico, you may need to be more of a traditional telecom player. So if you're a little bold, American Mobile SAB, kind of interesting. Sprint or T-Mobile if you want to be in a different telecom. Okay, so there's one we don't agree on. Here's one we do agree on with Mr. Cramer. Number 2, Mattress Firm Holdings. This is a bet on housing, and we agree with Jim Cramer that Home Depot and Lowe's are better places to make a bet on housing. If you watched our capital allocation piece yesterday, we like Lowe's, excellent capital allocators. We are, and then just in general, mattresses, beds, stuff like that, that's a bet on housing. So generally, if housing goes really nuts, then people buy houses, now they need to buy new beds and stuff like that. Okay, just so you know that. And then in general, we are against shorting, and we are not saying short this company, but the insiders have been bailing pretty big time, and it has a rich multiple of 45, and we really don't understand why it's so richly valued. So I would stay away from that one. Number 3 is Q2, QTWO for you home gamers. And Cramer needs to do some work on Q2. Well, allow me. And let's talk about the concept of vertically integrated value chains. Okay, so a vertically integrated value chain is an arrangement in which the supply chain of a company is owned by that company. So let's take, for example, ExxonMobil. ExxonMobil is going to go out and look for oil and gas deposits, drill those oil and gas deposits, extract the stuff, transport it themselves, refine it themselves, transport it again to the stores or the airports or whoever needs the fuel and sell it themselves as well. That's vertically integrated. All along the supply chain, they owned and operated everything. And that used to sort of be the key to business in this country, at least 100 years ago, up through the year 2000 sort of thing. That was basically the key to business. And then there's another concept of deconstructionism, which is not even all that new, but is sort of seeming to play itself out, seemingly. Deconstructionism into the separate verticals. So each of these little things looking for gas, drilling for it, transporting it, refining it, selling it, a different niche or a different vertical. So deconstruction is the idea that you should separate out all those verticals into their own companies. And for example, if you're probably familiar with spin-offs, just sort of make value out of nothing. So that's deconstructionism, the idea that these companies alone can be better served because then they can horizontally integrate. The transporters can get more and more pipeline and perhaps have economies of scale, or the refiners can invest in different technologies. If they buy other refineries, they might be able to refine different things, send things geographically to the place that makes the most sense and costs the least, stuff like that. So by breaking things up, breaking up a vertical value chain into the separate verticals, you can then horizontally integrate each of those verticals. Okay, so now let's talk about Q2. Q2 allows regional banks to offer virtual banking services. And so you might think of a big bank like Bank of America as sort of vertically integrated. It's going to do all the things itself. It's going to get the customers, loan the money, process them, build the interface for the online services, all that stuff. So a company like Q2 may indeed be filling a niche, offering services to regional banks that they don't have the resources to offer themselves and really shouldn't be getting into that business, vertically integrating. And so there really could be a niche there for Q2. If you believe in the value of deconstructionism, that the different verticals really are at a competitive advantage when separated out, then there very well could be a nice little niche here for Q2 with financial service tailwinds. Financial services will be around forever. Cloud-based tailwinds, okay, there's another one. However, Wall Street exclusive enthusiasts should know that this precludes from buying. They're not profitable, so they're a spec. And the CEO, CFO, CTO, and chairman of the board have sold numerous times over the past few months and year, and millions of dollars worth too. So you know that means no to Q2, although interesting business. Okay, for the Wall Street exclusive, I'm Joe Springer. I hope you found that helpful, a lot more helpful than yesterday, I hope. And I'm Joe Springer, helping you make informed decisions so you can succeed in the market. Come back and see us tomorrow.